Good morning, everyone. Happy Tuesday. It's 6:30 a.m., June 9th, and price of Bitcoin currently at 96.71. So I'm going to start off with the 15-minute time frame, but I don't want to stay on the small time frames for long. But the only reason why I wanted to show you guys this is if you can look at this previous trading range right here on this area before we sold off, hit it as resistance, and then sold off again. We pretty much came back inside that same trading range with this short squeeze right here, right? And then we, again, hovered down, spiked up a little bit, and then strongly got rejected. The rejection was strong because you can see that the volume on that little move up is nothing compared to the big candle that was thrown down. So again, I've stated before that bears are clearly under control in this particular area, this high of this range, okay? This top area, whenever you see volume coming in, spikes up here, even high sell side volume right here, high sell side volume right here, up here, and then even now right here. So this to me is the indication of distribution that's happening. Most people don't agree, and that's fine. I am still short, and I've said this before, that I'm still looking for more downside. Now, the one way we could look at the price action right now is, well, we're stuck between two mini trend lines, or maybe this horizontal support right here, which is the June monthly open, and then this descending trend line that you see going down. I would probably say that if you're looking for scalps, you can kind of long right here and sell into this trend line. Or if you're looking to short right here, you can even short down towards this June monthly open area. That's the only way to play it from level to level. I'm largely swing short because I still believe that we're still going to head down further towards these lows. For the many reasons I've stated before in my other videos, one being just the basic technicals of understanding distribution, two, knowing that the OBV right here completely just rolls over, right? And it hasn't really ticked up, even since over here, right? You can see when we hit this 10,087 high, it's very slight higher high in OBV, yet the price moves up almost $400 or $500 higher. Or I'm sorry, this was a high of, what is this? A high of 94.81, and the high up here was 10,085. So again, very slight higher high in OBV, yet almost a $400 or $500 higher move in the price action. And then same thing over here, right? You could see the spike in OBV, right? Or I'm sorry, the spike in price right there, but really no movement in OBV. So it kind of tells you that money's not really flowing in here. This was really just a short squeeze that was probably engineered, and then you just start rolling over, and rolling over. The reason OBV is important to understand is because you know the inflows that are coming into the asset, and you understand if the market is actually ready to push it up. Short squeezes, if not followed through, are nothing but short squeezes. They're just there to weed out a bunch of participants to the upside, trap a bunch of people at the top, and then roll over. And that's kind of exactly what happened right there, as you can see. So I'm going to keep this video short. By the end of this video, what you will know is my understanding on the market in a larger time frame perspective, how I have a routine of looking at the markets as a trader and investor, how I kind of look at my winners and losers, how I plan my day around the markets, and then we're going to talk about some of the trades that we took yesterday, and then by the end of this video, you also get 2 free trades in the altcoin space. All right, so let's continue with the Bitcoin analysis. So I've made it abundantly clear that if you're looking to trade from level to level, it's this trend line to this, or this June monthly open towards that trend line again. That's the only level to level play that I see. If we're looking at the breakdown from here, let's just say from the June monthly open, then I'd probably say from here down, okay, I'm at least looking way the heck down here towards the May monthly open. which is around $8,600. And it just so happens that the May monthly open is around a key high volume node area, which is around this fixed range. If you see over here. So you can see currently we're hovering right above this high volume node, which again, June monthly open. Break that, and then you head way the heck down here around $8,800, $8,700, okay? Which, like I said, coincides right around with that May monthly open area. Not exact, but right around the area. If we spike down here, I would not be surprised if we touched that May monthly open, okay? But until then, we're probably gonna chop around here, maybe for another day, maybe another couple days. I'm thinking that at most, we'll probably do this by the end of the month while futures and options expire, and then maybe roll over. If you look at this candle movement right here, and I found this really interesting because when I saw this big spike down yesterday, I really did not think that we're going to push up higher. I figured that we're just going to roll back over. This, to me, if you look at it from an hourly perspective, even right here, right? All this chop that we've done, all this that we've done is very analogous to a movement over here. I'm gonna show you guys that again. See how this is right here in September? We just kept rolling over and over, and then we had a big spike down and then started breaking that over the next several days. I figure that this looks exactly like that previous fractal that I just showed you. I don't know, you tell me, you know, leave me in a comment and let me know your guys' thoughts, but that's how I see it, because when you see a big spike down like this with high volume, and then you sort of continue to just grind down, I figure that we're going to break a very key level. You know, you don't just have a big spike down, you don't hover around this June monthly open area, hit it multiple times in a month, only to push up from it. I mean, it's possible. Is it likely? Not really, okay? So that's kind of where I am when it comes to the crypto analysis. And I get all these messages sometimes, you know, when price moves like $100 or something, like, oh, you got wrecked and all kinds of bullshit. But fact of the matter is I've stayed firm in my resolve of Bitcoin potentially heading down. This sideways choppy movement right here, these small candle spreads, make my resolve even stronger that Bitcoin is going to roll over. It's for the many reasons I've told you guys before, that you see this movement up, you see this volume down. Then you see a big spike of volume right at the highs. I mean, and it's not volume where you can see, you know, there's a large absorption. It's high sell side volume, and you're kind of just chopping around here, right? If it was high sell side volume and then price continued like this and started to break through this key high, which is the 10,500 high, then I'd say, all right, well, it looks like this is reaccumulation potentially before an upthrust. Not the case right now. This to me looks like a larger range of distribution. A lot of people don't agree, but the facts are there for me. The facts are there for me to stay short and not think about any long-term longs. If I see a breakthrough 10,500, then I'm wrong. Then I'm going to long. But until then, this is the best risk to reward short that you're going to get in terms of a swing. Just think about it like this. You're shorting here, your stops above this area, above these key highs, and you're at least targeting on a daily time frame, at least down here, at least, right? So that's around 7.5, 7.6. Below that, a key support level is right way the heck down here, $6,700, $6,800 or so. Look at the risk to reward right there, 2.7. And if that breaks, I'm at least thinking $4,000 or $5,000. Greatly increases your risk to reward. So you can see some of the reasons why, you know, I personally think this is the best swing short that you're going to get. Okay. On top of that, I've also mentioned that, you know, again, from this key high that we had a couple days back, 10,426 on Coinbase, to the low, 92.66. You can see right here. Let's see here. I don't know why this thing froze up. Okay, there we go. Okay. So you can see right here from this key high to this key low, all we did was smash into the previous 50% fib, and then we're starting to roll over. We have not been able to break through that 50% fib. So it makes me, a little suspect about this whole movement right here, this whole chop that we're seeing. I don't know if this is chop to push further. I'm thinking that this is probably the high that we're going to get to. This means the bears are pretty strong. They're defending this 50% fib marker. Okay. All right. Some of the other things that I wanted to talk about is, there's a lot of people who have trouble with creating a routine, trouble with understanding how to deal with the markets, trouble with dealing with the winners or losers, how to keep their money, how not to piss it all away. And I wrote down my trading philosophy for my Advantage members, and I told them, a couple simple things. Number one, obviously forget about your winners and losers. All right. You have to think of whatever happened yesterday, chalk it up as a win or a loss, whatever, move on. Move on quickly. Create a morning routine. So for example, myself, I wake up right around 4:45, 5 a.m., do my morning routine of meditating, reflecting, journaling, whatever. And then I start going to the markets maybe 30, 45 minutes after I wake up. Do your research the night before to set watch lists for assets. So this is a little different because this is more so for equities. So I come from a background of equities. I started trading in 2008, 2009, predominantly starting off in alternative energies, started trading commodities right around 2013, 2014, and then Forex right around that same time. And then 2016, I got into crypto. For me, these watch lists, you can still apply them to altcoins and stuff, maybe set alerts. But in large part, it's not like you get earnings reports, you don't get guidance reports, you don't get, management transitions, you don't get new product, product lines coming out. You don't get partnership research from cryptos as much as you do, at least in equities. But this is a little different. But I do think you can set alerts. When you take three losers in a row, for me, it's usually a 24-hour break. A 24-hour clean break from the market where you don't trade. Even better if you just completely, turn off your attention from the markets. But I think, just taking a break from trading, nonetheless, is great. 3 winners in a row, you get to calm your ego and your confidence, and then, don't oversize. I typically think of it as if you're on a winning streak, just keep going. Don't get too cocky and don't oversize, but keep going, because winning streaks are tougher to come by. And when you get them, just ride that momentum. Always have a trading journal in handy, write down your reasoning why you got into the trade, the leverage that you took, your entry point, exit point, your game plan for the entire trade before you enter the trade. You don't enter the trade and then develop a game plan to wrap around it. That's, just lying to yourself. You enter the trade because you knew you had a game plan, because you knew you had a watch list that you were watching, you had certain levels that you were watching, you had an alert go off. These are things that you look out for, okay? And then obviously, manage your risk. This is number one, I would say, in terms of just trading. Manage your risk, okay? Don't oversize, set your stops, don't blow your account on any one trade. And then listen to the chart and technicals, right? This is what you get, that the homework you get all from a chart, the volume, the indicators that you watch, news events that are coming out. These are things that you want to pay attention to. There's not really significant news events that are coming out for Bitcoin. There's talks about the South African Bitcoin-related company raises $3 million to produce solar energy. I also saw Suzu, he posted that there's a lot of option calls that are coming into the system for Bitcoin. So you can see right here, right? CME Bitcoin options, open interest is nearly entirely all calls. Now, this could be very well, more bullish than it is bearish, because calls and options are typically looking for higher target prices, right? Higher strike prices. However, you don't know how CME is positioned. You don't know if they bought 4,000 options in calls and then 10,000 contracts are their hedges in the short side. So you don't know how, traders are positioning themselves in terms of hedges, in terms of their exposure on one exchange versus another. So I think it's very premature to just assume that call options coming into the system is just entirely bullish. So I don't know. I think that's a bit more of a premature tweet. Personally, like I said, if Bitcoin doesn't smash through this area soon, we're just going to kind of hover and meander around here and then start to roll over. Okay. All right, so let's get to the other trades that we took yesterday. Here is our option side. So last week we actually took a pretty nice trade in Schlumberger. It's a oil field production company. Let me see here. So we took it, right around this 2050 area. And so we took that call. As you can see, that was a call for 23 strike for July 2nd. I don't know why that's hidden. But anyway, point is we made a significant amount of money on this call right here, 110%. And then we chopped up another win on the other remaining position. It was about a 320% gain. And then yesterday I picked up Beyond Meat. Beyond Meat because I like Beyond Meat, the company. And then I also saw some China news in terms of partnerships where they might be expanding into China. So I picked up some shares in Beyond Meat and also some option calls for July 2nd. I like July 2nd because it's prior to the Independence Day, right? July 4th in America. And also it's about a good month away. So I like to take out my option call positions. If it's more so FA related, like fundamentals related, and I want to see exactly what's going on in the company, and I see that particular sector actually moving, I like to take calls about a month out. So doing really well on those calls, as you can see. I think by the end of the day yesterday, we had, some ridiculous movement in the options. So you can see SLB up 320%, Beyond Meat was up 140%, Beyond Shares, which I had also picked up around 10.12%. And all this stuff is time stamped. You can look it up. Like yesterday, I think I mentioned, what is it? Way the heck up here. So around 10 a.m., I picked up these calls. As you can see in the shares, price was literally at 146.59. Put out that alert that I'm taking this position. And again, I don't provide financial advice. This is just me showing you guys how I make money on the market. For those of you who have been watching me for a while, I've been trading for about 11 years, right? I only became profitable right around 2016, 2017. I had full confidence in myself to be a full-time trader and actually walk away from everything else and actually go on, a sabbatical with my wife in South America and be able to live there and trade from there right around late 2018, early 2019. So, it's been a long journey. So I'm not someone who kind of just found out how to trade like right around when crypto started. It's been a long journey, and I'm happy to sort of share my knowledge and my information with our community. And if you guys are interested in joining our community, we have a 50% discount. I think I stated this on the Twitter page right here. You can see right here, 1 month discount, 50% off. If you want to try it out, come join us. Alternatively, there's a course on our website where you can join 7 days free of the Advantage membership if you buy the technical analysis course. I think the course is like $15 or something. So you can go on the website and go check it out, Cryptosomniac.com. Let's see here. So right there, technical analysis course. Okay. So if you buy that, you get 7 free days. All right. So do come join us. But aside from that, folks, I don't think there's a whole lot to say. You know, I've talked about even this indicator right here. Let's go on a daily time frame. This one right here I've talked about, which is the miner capitulation, where the miners are probably suffering significantly due to not only a supply cut, but also a reduction in reward from the halving, right? So that supply cut you got, and then the hash rate spiked up, and then the price of Bitcoin is still 9.7-ish. So they have to pretty much deal with the cost that they have with rent, electricity, mining equipment, insurance, all that stuff with the current prices. And the Bitcoin production cost indicator, which Charles Edwards has created, shows you that the average cost for a lot of miners is at least $10,200 or as high as $15,800. So they're at a significant loss right now, And, again, I think inefficient miners are probably going to get pushed out of the market. And I think at some point, the efficient miners will take over. But I don't know if that's here, I don't think that's going to happen here, because if you really want to crush the inefficient miners out of the market, you got to dump price more, kick those miners out of the market. Because over here, who knows, they may keep their machines on and think that we're going to push up. You keep dumping price or there's not enough demand, those miners are going to get kicked out real soon. Okay. Let's see here. Oh yeah, so this is the COT data, which is Commitment of Traders Report. Non-commercial right here, which is your hedge fund exposure, institutional exposure. Again, last week they kind of flatlined a little bit in terms of their short exposure. It doesn't mean it went down, but now you can see more increased short exposure. Right? So as this goes down, that means you're seeing more of an increase in shorts. This is as per last week's data. CME data comes out every Friday. Okay, non-reportables right here went up a little bit again. But again, from this key high right here, it's still a little bit lower. Open interest dropped because we saw that big push in the market. However, if open interest climbs this week again, and we see more non-commercials shorting, you should be cautious, because this is the smart money. This is the big money that's looking to potentially, stay a little bit more short heavy. All right, and more often than not, they're on the right side of the market. Okay, so probably ignore your average guy on Twitter telling you that you should be bullish. Chances are they're not properly positioned in this market. Okay, and in our community, we make it abundantly clear the positions that we take, like the screenshots that I just showed you earlier. This one here, or if you go into the options chat, I typically show updates of how our position is doing. And I also define the risk. Like if I'm taking a trade, here's my short position, here's the amount of risk that I have in the trade, here's my average, here's my stop, the reasons why I'm in the position, and all that jazz. Okay, so come join Advantage if you want to. If not, hit the thumbs up. Help us get recognized for all the free content that we provide. Subscribe to our channel, and at least come join free Discord. In the Discord side, sometimes I provide free trades. There's also very unique analysts in here where they provide their insight on the markets. Cal Kimball, he's one of them. Paul, he's another one. Timeless being, I don't know if you guys have heard of him. He also comes in and chimes in sometimes. So a lot of smart people come through our community and provide their insights on how the markets are doing. So I hope y'all come join. All right, that's it. Cheers and have a good rest of your Tuesday.